Hello, I'm Donald Leggett, and welcome to the latest London South East CEO interview. I'm joined today by Leo Koot, Executive Chairman of Columbus Energy, and he's joining us from Portugal. Welcome, Leo.
Hello, Donald. Good to see you again.
It's fantastic to see you. So how's the lockdown working for you in Portugal?
Well, we're locked down. I'm a little bit of cabin fever, but we've got a dog, we've got countryside, so we're spending a lot of time outside, out with not being close to people.
You've got Columbus Energy to look after. So
Exactly.
for those who are not aware of Columbus Energy, summarize the onshore Trinidad oil operations that you have there.
In its current form, we started the company 3 years ago when we took over LGO. We've grown the business significantly. We're focused on Trinidad and South America. We started with the Gudrun field. We have subsequently added 3 other fields. And more importantly, we've sewn up the Southwest Peninsula exploration acreage.
So Saffron, you've just made a big find in the Saffron Field. So what magnitude of scale is that find, and how much bigger is it than your existing Southwest operations?
Well, it is a transformational discovery for the business. We've learned that the mature assets in Gudrun, Trinity, and South Arran, they're good money spinners, so you can make good money. But you shouldn't spend too much money on them. So you need to take the money out. So where do you then focus your growth and your free cash? That is in an exploration area where you've got plenty opportunity for growth. In the 3 years, we have negotiated very good economic terms in the Southwest Peninsula. We've done a lot of work on our seismic. A lot of interpretation work. We've identified multiple prospects, and Saffron is the first prospect to be drilled. And I'm really happy to report that it's a discovery in both horizons, the Lower and the Middle Cruse.
It takes us very neatly onto the Saffron appraisal well in itself. And it was deep, it was difficult, and you didn't just go Middle Cruse, you actually went all the way to Lower Cruse, which tells me it was a bit more expensive and probably a little bit more difficult. But you've discovered 2 standalone reservoirs. So take me through everything that you've discovered.
In terms of answering your previous question, so what scale is this in terms of value to the business? Is that if we look at our field development plan, which is still being matured, but the present form suggests that just the Lower Cruse, so just the deeper section of the reservoir, has got a value of $90 million NPV. So that's material if you now recognize that our market cap is around £50 million. So that is material, and that's why I call it transformational. When drilling the well, we drilled first through the known area, the Middle Cruse. The Bonas field, our existing Bonas field, is producing from the Middle Cruse. We've discovered oil in the Middle Cruse because it's in a different fault block. So the Bonas fault block is slightly deeper, more to the west, and the Saffron Middle Cruse fault block is higher up and more to the east. The most important point, though, is that we've managed to cross a very difficult barrier. On our website, you can have a look at sections of the well. But around 3,000 foot, there is a detachment surface. That's why Mother Nature has been playing their games and pushing one plate up the other. So the Middle Cruse is in the upper plate and the Lower Cruse is in the bottom plate. And you can imagine that in that friction point, there are a lot of stresses in the earth. And up until Saffron, the previous operator, have been unable to pass that difficult spot. We now have managed to drill to 4,500 foot, and we discovered nice, good reservoirs with very beautiful quality crude in them.
If I could take you back to the middle, how much is the middle one actually worth?
The Middle Cruse on it, we've got standalone well economics in the presentation, but we believe now that the NPV of just the Middle Cruse is somewhere between $3 and $5 million per well.
Oh, per well, okay.
Yeah.
So relatively
Yeah.
small, so the big prize is the lower.
Yes.
Great, good to make that point. The drilling contractor on Saffron has agreed to cover the costs of drilling Saffron 2, your first drill.
Yeah.
Talk me through the economics of that one. Where did they get their money from?
So first of all, we're really pleased to have Nabi on board. You would think that they've seen all the challenges we've had drilling Saffron 1. Still, they're confident that they can drill Saffron 2 and achieve a good producing well, and therefore they are prepared to take full risk. So not only drilling risk, but also reservoir risk, which is for us a big vote of confidence. The economic split, first of all, oil prices need to recover to a decent level. We've agreed $35 as the decent level, which is, I think, modest. And I believe we'll achieve that in the second half of 2020. Then the economic split. So Nabi is paid in crude. So after the well's drilled, 25% of the net revenues will go to Columbus and 75% will go to Nabi until the point where their costs are covered, i.e. their investment is paid back one time, and then it switches from 25 in Nabi's favor and 75 in our favor.
So given all the problems in the world, and we'll come to those in a moment, but do you still think that Q3 might potentially happen? That the drill might happen in Q3?
So my friends in banks who know a little bit about how these markets work, and they look at global stocks buildups, they tell me that if you plan for 2 quarters of modest oil prices, somewhere between 20 and 25,
which is where we are now.
That's where we are now. Then you're in a good place, because by then you already see that Europe is slowly reducing the lockdowns. China is already on the way to recovery. So you would see the economy slowly coming back up again. But then you still need to work through all the oil glut, which is in storage now. So that's why 6 months is a safe period to use for planning purposes.
There may never have been a larger oil glut, though. So you still sound quite bullish relative to the fact that the demand has completely disappeared and may never come back to where it was.
The conversation I hear is that there is a 30 million barrel per day demand destruction. The OPEC Plus, they've agreed to reduce 10 million barrels. The impact of low oil prices, I believe, will add another 15 million barrels, 5 million barrels of supply destruction. So if and when the economy starts picking back up again, transport starts going back up again, then there's a balance. And then it's up to the OPEC Plus to be disciplined to maintain the current production levels. Then you'll see a relatively quick reduction of that glut.
It's interesting, though. You're very bullish about this, but here British Airways are talking about laying off 12,000 staff out of a third of their total staff, and they're a well-run airline.
Yes, but I cannot think of a sector which is harder hit by this COVID-19 crisis than the airline industry.
It's true.
I think the only revenue they're getting is freight. So all the passenger aircraft transportation is gone. That's enormous. That's enormous. So they hurt.
Oil price to one side. Let's talk COVID. And you 2 weeks ago you made lots of announcements about your operational cutbacks. Could you talk us through those and be as honest as you can about how it's going to impact the business over the next month?
Yeah, so the first steps we've done is to make sure that we can operate our fields safely. So we've provided all the relevant protection material and equipment for our crews to continue to operate safely. And then the next step is to make sure that the the business has got the cash and the financial strength to sit through this period. So that's why we've taken in consultation with our staff the decision for the directors and the executives to stop getting any cash payments, and then the people in the field, they're on 60% of their salaries now.
And some poor souls have been laid off as well, yeah?
Well, yes, and we're trying to retain them for our business. So some of those people we're using for consultancy work. So one note which is very important is that Trinidad is an oil country. So Trinidad understands what happens if oil prices come down or come back up again. So people more or less volunteered to say, well, this is what I'm comfortable with. This is how far we can cut, and to ride this one out together. So the spirit within Columbus is very high now in terms of we're going to get through this together.
Which neatly takes us to the balance sheet. What does the balance sheet look like, and what's your funding, for the end of the year, the next year, whatever?
So we're doing everything to preserve our cash. We've got 2.4 million in the bank at the moment. So we've not run out of money. Together with the cost savings, will come a long way in completing our programs this year. We've got a couple of tricks up our sleeves. We've got a very good relationship with Lind, but there's no imminent plans to do anything with them. We're good where we are.
For those of us less familiar with Trinidad, let's just take an overview question. It's famous for its well understood geological formations and its low OPEX. That's the good news. It's also famous for its high tax and its low margins. So bear all that in mind. What's your strategy for taking this excellent discovery saffron forwards?
Exactly for that reason, we focus on the South West Peninsula. In our mature fields, we are operating either with farm outs or with IPSCs, and that's where the high tax, high government take come from, that reputation. Mm-hmm. The South West Peninsula has got a different licensing regime. It's more akin to the US, where you have got contracts with landowners, and the landowners have got the mineral rights. So there is not the big royalties to pay to Heritage or the state to be able to operate and produce hydrocarbons from those licenses. So usually there is we retain 60% of the revenues in the mature fields. In this environment, we retain 90%.
And you also have a plan for potentially selling the oil on the international market with a pipeline to deep water.
Yeah, so that's
put that in context for us.
Exactly. So that's another benefit of the Southwest Peninsula. So if you look at the map of Trinidad, it is the tail end, close to Venezuela. It's bordered by two seas. It's relatively easy to put a short pipeline, 500 meters into sea with a buoy, so that tankers can load crude, which we in future will have stored in the Southwest Peninsula, and then we're open to the global market. So
plan A, you sell your oil to Heritage. Plan B, yeah, you sell it on the international oil market.
Yeah, and also important that it's paid in US dollars rather than Trinidad dollars.
Which would be happy days indeed.
Yeah.
Is it too early to say which way you might go on
that? We are working on the field development plan now. It's a phased development, so we'll probably we'll drill in batches of 5 wells. I would expect that the first 5 wells will be producing into a Heritage system. And then as we grow our production and we get more familiar with the field and may have an additional discovery, because this is just the first well we've drilled in our exploration acreage, and it is already discovery, so we've got great expectation for the future.
So what else might you expect to discover? This was an appraisal. It was fantastic. What else is there, do you think?
We've got good seismic. across the field. We've interpreted the seismic. We've seen multiple targets. I think in total we see 12 targets in multiple horizons.
And how realistic would it be to get all of those 12 working?
We've de-risked quite a significant number of risks in this well. So we've proven up that is good sand below this magic 3,000 foot point. We've proven that there is light hydrocarbons in the system, and we've proven that we can drill past these troublesome areas. So this well had a chance of success of 45%. It came in. So I suspect the rest of the opportunities to have better chance of success numbers.
Better than 45%.
Yeah.
Okay. You're going to be busy over the next months. My final question: what news flow can we expect? What else might you be getting up to?
Well, we haven't talked about Suriname yet. So you know that we've made our first step into South America by entering into a PSC with Staatsolie, the state oil company in Suriname. We are extremely excited about Suriname because you will have read in the press that Apache has got 2 beautiful discoveries deep in the offshore. We're going to try to re-enter 2 wells and bring them on production again by the end of this year. If we can't re-enter them because they're quite old wells, then we'll probably drill 1 well this year and maybe another well next year.
Trinidad, what are your next steps in Trinidad?
So the next steps are drill Saffron 2 as an appraisal development well, get that on stream, get all the planning permissions and approvals for the field development plan for Saffron through the ministry. We've made good progress on improving the commercial terms, which we just discussed in the Gudrun field. So we expect to be able to sign a new agreement with Heritage in the near future. And we expect to start our permanent CO2 injection campaign in Trinity.
Good to hear. Leo, it's always fascinating to converse with you. Thank you so much for joining us today.
Excellent.
If you'd like to see more interviews like this one, then do subscribe to the London South East YouTube channel. And my final thought, stay safe.
Thanks very much, Donald.